My mission with the Mortgage Report is simple: to save you money. I'm here to provide weekly insight into the market so you can make the best buying decision. I want you to know where interest rates are headed, and I promise to let you know my lock or float position. The Mortgage Report starts now. Hey, what's up, Bob Mortgage Nation? Here's this week's Mortgage Report. All right, let's get into some market-related data right quick before we get into the bond market. So we saw 1.95 million existing homes for sale right now. That was some of the market-related news that got released. Now, that puts us at about 4.3 months worth of inventory, and that's pretty tight. We really want to see about 6 months worth of inventory for a stable market, okay? Now, we also got numbers around appreciation. Appreciation was at 6.4%, and those are pretty strong numbers. So kind of what I'm looking at, and we also had home purchase applications, those numbers were higher. So all that data is really telling me that we are in a very strong housing market, okay? Even with tight inventories and rising rates, our market is being resilient, and we're starting to see a very strong purchase market right now. Now, as it relates to mortgage bonds, we have a pretty big week coming up, okay? So we have a lot of housing data that's going to be released, and that all starts on Tuesday of this week. If we look at my charts right now, you can see we closed just above 101.5, okay? That's a big number. We closed at 101.56. And you can see why 101.5 is kind of our ceiling, or our floor of resistance right now. So what I'm going to look at, because bottom line, I'm going into this week carefully floating. But if we break below that 101.5 mark, then I'm going to convert from a floating position to a locking position, because there's too much room to the downside. We would fall potentially all the way down to the 101.23 mark right here. Now, the opportunity for us to see improved pricing is also a bit of a stretch, because we have a quadruple ceiling of resistance right now. We have the 25-day moving average, the 50-day moving average, the 100-day moving average, and the 200-day moving average, all becoming a bit of a challenge for us to break through those four particular levels. So I'm afraid right now we're kind of in a sideways trading range at the moment. If you guys would follow me on Instagram, just search Bob Mortgage and follow me, because on a daily basis, I'm putting out through Insta stories what's happening to the bond market as it relates to that particular moment in time, and if it's impacting interest rates positively or negatively. And then I'm converting, since this is a weekly video, I'm kind of converting that into a daily series. So definitely follow me on Instagram. Look, I've been a mortgage advisor for over 20 years. Been blessed to provide financing to over 25,000 families during that time period. I watch the markets daily to make sure I can get you the right home loan at the right price. With Bob Mortgage, your dream loan is already within your reach.